Good morning and welcome back to the Opportunistic Trader for September 25th, a Tuesday, the first day of the Fed two-day meeting. Should be kind of quiet, but expecting some fireworks out of that. I wanted to thank Vince Lancy, who's with me, for his pregame of our pregame. Educational and informative, although he's stealing some of my airtime, so I'm a little jealous, but no, I'm good. I appreciate it, and it was very insightful.
Well, Larry, I did pay you a lot of money for that airtime. No, I'm just kidding. I am grateful for it, and I hope it is a proper lead-in for the main event, and that is, the Johnny Carson over here telling us what we should be doing, and I mean that sincerely.
Well, I appreciate it. So
let's get who made money off of you yesterday.
Oh, I like that.
And he immediately said to me in a text afterwards, "F you. I don't need you. I already hate gold. I'm trading oil and spoos now." And this is so I need the show because I'm losing people. It's like people that were my friends are no longer my friends, and it's hurting my feelings.
Well, it was very funny. It's funny you bring up that point. So there's a guy out there, I won't mention his name, and he's a friend, but he won't really recommend his people to our site because he's worried that they're going to leave FX to trade S&Ps. I'm like,
I totally get it.
All right. So I get it a little bit, but anyway.
Oh, I'm joking. He's, he's put it this way, and I say this to everyone who's on the team. People are grateful to have, like, this guy is a 30-year trader, and he's like, oh, my world has opened up. I've been so myopic. And he's not one to use superlatives, but he's like, this is a real trader community. And I'm not even hyping it.
No, I appreciate it. We're just building. We're just starting to grow. So we'll see, we'll see where we go from here. It's exciting. It's fun. It's, for me, very different than anything that I've ever done. My world was always sitting in a room by myself, running high net worth and institutional money, really not providing information to the public or anything like that. It's something, and in reality, I'm an outgoing, friendly guy, although people in the business probably wouldn't agree with that. But it's nice to try to help people, and that's the aim here. And hopefully we can do well.
Got ground to cover, but I want to give you another indirect compliment because I know where it comes from.
Oh no!
A question that people are asking me is, I know this guy. Why is he doing this? Why isn't he managing money? And I have the answer because I know the feeling. And the answer that I've given people, and you can tell me if it's right or wrong, it's like, look, people will throw money at anyone who knows how to trade and manage money, but you don't get paid a multiple on managing money. Not to mention, if you're good at something, you can always go back to doing that.
Well, making listen, I'm doing. Well, no, listen, I'm doing. No,
what I'm saying is making money is easy. Listen, if that's all you want. Come on, let me finish a compliment. Making money is easy if that's all you want to do. If you're good at it. But here's a situation where there's a feeling of, helping people along and become better traders. And we're building.
I mean, to be honest with you, there's a number of different reasons. If you want the true answer, I looked at this 5 years ago. We were going to do this. For whatever reason, we kind of got lazy. We didn't do it. I saw the products that were out there. I see what's going on in the world of education, information, and all of that. Right. And it's hellacious. You got guys jumping up and down in a bathrobe, screaming and yelling, telling you can turn $15,000 into $1 million.
That was me.
And it's
me. I said that. That was me. I was jumping up and down in the bathroom.
And then that it's easy and anybody could do it, and everybody uses. The big angle now is, getting a school teacher in that was an ex-school teacher that can now trade. So I see what's out there. It's really not good. I'm trying to provide information, education, and our experience to the marketplace, which, listen, on many days, unfortunately, it's probably not that good, because you can't make money every day. And, but we're trying to instill discipline.
Well, the point is, I mean, you hope to get paid by doing something that's going to, add value. That's
Well,
all.
listen, the payment is really somebody coming to me, and I have some ex employees and people in the chat room that used to work for me that are now in the chat that I'm chatting with, that used to trade with me over 20 years ago. And it's nice to be able to, talk to them and, get a call at the end of the day and, reconnect. So a lot of that is important to me. And again, I'm able to do my thing and show it to the world. So, that's sort of the reason. And I appreciate, the compliment. It's nice to, be in a community of people and try to help. But, we'll get more into that at a later point. I just wanted to quickly go over yesterday's action. It was a quiet day. I think we had one winning trade in Apple, and we are short crude oil from basically around where it's trading. I'm very convicted in this trade. I think you may have to sit through today, maybe tomorrow, but I do think that we will not make a higher high in here, and this could be the high of the move. So I'd like to try to stay in this trade and capitalize a bit. So that's really what we have coming into today. We just put on a short in S&P at 29.32. It's up 7.25. Yesterday was probably one of the most interesting trading days that I've ever seen in a 30-plus year career, as far as manipulation by the algorithm and the computer. And what I mean by that,
you're referring to stocks, right?
Yes. What I mean by that was yesterday morning, the Dow was down slightly at about 940. It was down probably about 25.30. The S&P was down 6, and the NASDAQ was down 75. Okay. So the NASDAQ was down over 1%. The S&P was down 30 basis points, and the Dow was basically flattish. Okay. Well, all of a sudden, out of nowhere, they bought NASDAQ all day long, didn't stop. The NASDAQ rallied almost 2% off the low, and the S&P actually went 6 points lower. Okay, and this is the better one, and the Dow went down 160 points. So literally in my trading life, I've never seen anything. Oh, it was unbelievable. I mean, but unfortunately, and I think this is going to lead to a major problem at some point in time. There's no people. There's just a computer, and the computer does what it does, and you can't get in the way of it. You can't fight it. If they're buying NASDAQ today, you got to buy NASDAQ. If they're selling NASDAQ today, you got to lean on NASDAQ. If they're buying S&P, like these markets used to move together. There are so many things out there that I see right now that are the biggest divergences that I've ever seen, ever. Literally ever.
But for in a normal market, and again, we're not. I'm not bashing the market, but I understand what you're saying. When you say to me the Dow is like, I would say if I were a macro fund manager, over a 2-week period, the Dow will rally as people take their money out of and put it into bellwether high quality stocks. Now it happens in 5 minutes, and then it gets undone.
Yeah, but it's
play that.
But it's interesting. It's like yesterday, someone was pointing out to me, I think, that the only stocks in the Dow up were Apple and maybe Boeing or another name. Dow was down 188, actually closed on the low tick of the day for the most part, and the NASDAQ closed on the high tick of the day. So these divergences are something that I've never, ever seen. And like today, you got to say, hey, are they going to buy SPOO, or are they going to buy Dow, or are they going to buy, so, but a lot of this might be into, quarter end. There's a lot of stuff coming with reweightings, and indice changes that are going to really come to bear on the day
Yeah,
before
someone pointed
month
that out in
end.
the chat yesterday, that there's a major reweighting. I forget
Well, I think that they're changing
by sectors. They're
the
changing names of
grouping,
sectors.
right? The groupings of how they're looking at this stuff, which I don't know. It's funny. It always makes me laugh. In the
You take
business,
out the losers, you leave the winners in, and you
right?
have a great index.
Like the funniest thing is, since I've been trading in 30 years, they've probably taken out half the Dow components, and all the ones they take out are the dogs.
Right, and there you have it. That's anybody who remembers the day trading shops. You'd walk into a day trading shop, and someone would say, "Everyone here is profitable," and then you'd walk out and you'd say, because you're a trader, you'd say, "That's because you fire the losers in 2 weeks." They do the same thing with indexes. So
Yeah.
tell us what
No.
they're doing. What should we doing? What are we doing here today?
You know what? I want to try to take a stab at the short side on S&P. If people are looking at this trade, I would equate it to 291.88 on the SPY. So, any of these trades that I do in S&P are equated into SPY. So if you're an equity only guy, you could trade SPY and get the exact
points. The same thing. Yeah.
Well, no, I'm saying, but it's the exact same thing, and the sizing, obviously, because it's an equity, the sizing would be different, but it would really be the same thing, So if you're looking for a point in SPY, you're looking for the S&P to move 10,
right.
10,
so if you don't have a fusion
10 bananas.
Count, there's plenty of product on the equity side you can use that mirrors what you're doing.
Mm-hmm. Yeah. Interesting. I'm looking at my board and I see a little Facebook must have some news because it's down 4 bananas, a little over 2%. So that's the standout red thing on my board. Everything else is green. I wanted to point out the movement in Amazon yesterday was insane. It was down 75 and literally went green $20. So it rallied almost $100, which doesn't seem like a lot, but it's 4 or 5%. So they can't put a nail in that coffin. And other than that, on the equity front, I don't really see any standout. The Nasdaq to me looks a little bit overbought. But the problem is, if they want to buy, XYZ, they'll just buy it all day. So, we shorted S&P. That's more our bread and butter. So we're right now short S&P and short oil.
Just want to point out overseas, related to your S&P trade, based on the emerging market thing. China was closed yesterday, but the yuan was weaker, meaning it rallied on your chart. Today, you're seeing the Shanghai Composite, which is the Chinese indice that I follow, lower. And so that's really like yesterday's move today. So if you're looking at that when you're thinking that, oh, maybe he's shorting it because of the Shanghai Composite, something overseas, I would just say no, he's shorting it just because Larry just is bearish on the S&P.
Well, I just think from yesterday's action that it looked really heavy and, it rallied back all of yesterday's action quickly. But again, we'll keep an eye on that. I'm more convicted on the oil, but getting to the overseas markets, like you said, Asia pretty much closed across the board. Can't get a good read out of there. I will say I'm impressed in a way with the way China is coming back on this tariff stuff. And
I'm not. I'm just like, the tree bark comment is the thing that I just keep saying.
Yeah, but they're not. Him. Yeah, but the thing is that they're not. They're not getting crazy. They're being very calculated.
I know.
And it's very un-Trump-like, who will, rage at any point in time. So, I thought yesterday after the close, Navarro came out and his comments were very negative, I thought, for the market. He basically stated that, worse than Trump. He sounded worse than Trump. They've been cheating, this, that, they're, running it a certain way. They're a scam economy, whatever. Right. So, you got to keep an eye on that. And then, going to Europe, the DAX is up small, up about 20 basis points. The rest of Europe is flat to lower. I'm very surprised. SPUs are coming in a little bit since we started speaking. But I'm very surprised we're up as much as we are, even though 6 isn't that much, but relative to the types of moves that we have on a 11 vol. I noticed on my screen before that the volatility index was like in the 11 handle again. So, that's interesting in itself.
It is interesting going into the Fed meeting. I mean,
well, I think the Fed is, listen, the Fed is gonna raise, and the question from here is, when they raise, are they going to be hawkish and really signal that, listen, guys, you have
December's
this wrong?
Another raise, right.
And I personally don't think they're going to do that. I don't know what that means for the market. I don't know if they're going to be as hawkish. So, listen, they're not in a time rush. It doesn't matter if they do it in December or the first meeting of next year to see how everything, parses out. So, I'm not as convinced that they're going to, be as hawkish. But again,
I think it's crazy. For me as a trader, I just see people taking off their insurance or hedges before news comes out because they're discounting. To me, it's like they're discounting so much. I don't know. It's just it's sell the rumor, sell the news. But
well, it's funny when you look at insurance and whatnot. I was at a firm called Spear Leeds and Kellogg, and I used to run their hedge.
I was your customer.
As many people were. We were the largest clearer on Wall Street at the time, and then we were bought by Goldman. But I used to run the hedge book for the entire firm. Okay, so what would happen is they would, we were specialists on the floor, and they would take in massive amounts of inventory. When the market was, we don't even see anything like this anymore, but when the market was down 2%, 3%, we were max long, or if it was up big, we were max short. So I would run that book, and the truth was that book never made money. It just never made money. And you were hoping it never made money, because if it made money, we were getting murdered. So that book didn't make money. So it was an unenviable job to run the run the hedge book. I have a good friend who used to trade.
And if you made money on the hedge book, that meant that you're not going to get a bonus because the book that you're hedging is getting destroyed.
I got a couple of great stories about that. There was someone who I won't mention the name that used to trade for us as well at Spear Leeds, and he went to a big hedge fund, and he basically saved the fund, and he made hundreds of millions of dollars, except the fund was net down. So he never got paid. So anyway, talking about insurance, it's an unenviable thing. No one wants their insurance to pay off. It's like living in Florida. I have hurricane insurance, but I never want a hurricane to hit my house because it would be a pain in the neck to rebuild my house for 2 or 3 years. So, you're wasting money. And then what happened at Spear, the interesting note, and I think you touch on this a little bit, we stopped hedging. We literally stopped because we just kept losing and losing and losing. So they were like, we don't need insurance. So I think, like you said, very many people are not playing that game. They're not hedging the book. And, to their credit, I guess it's worked so far, So, this market, looking at it, it couldn't handle a 2% down move. If we had a 2% down move, that would be a crash. Literally an absolute crash. It would be 60, 70 handles. We haven't had that. I can't even remember when. It's got to be almost back to the 1 or 2 days in February. What's interesting during that February time, I know I'm going off in some tangent, but it's all related to the same stuff. We were clearing at a local FCM, and many of these FCMs or these futures clearers that are not like UBS or Goldman and whatnot, they were literally tapped out on that day. They were out of business. So a little move like that, You know, it was a big volatility move, but it wasn't a huge
Right.
market move. Literally put these firms in position to be tapped. So these are things to always keep in the back of your mind. You don't trade it on a minute to minute or day to day or short term, sort of the way that we're trading, because it really doesn't become that impactful. But it's just interesting food for thought, you know, and understanding, you know, markets in general. So
Clearing and counterparty and systemic risk. Yeah.
well, yeah, I mean, listen, you know, we saw it that day. I mean, the volatility, I was talking to someone yesterday and they were saying they had a short volatility fund and they lost 45% of their fund in one day. And they actually said they did better than 90% of the people out there.
Wow.
When I ran money, if I lost 2% in a month, people would freak out. So I don't know how somebody's losing 40 or 30, but you know, I guess it's a different strategy. But the vol is, you know, it's interesting, you know, talking about a good trade that might pretty much always work for you is long S&P and long volatility. Because if the S&P does crack, you'll get hit on that, but the vol goes up 10 times faster than the S&P goes down. So
well,
I think that's an interesting
new highs,
trade.
when the market makes new highs, I you know, as an options guy, when a market makes new highs in a put skew market like the S&P is, and you see vol blow out, people debate, oh, that's bullish, that's bearish. I'm like, I don't care what it is. It just tells me I should be buying hedged calls, because if we go up, vol will blow out, and if we go down, I'm going to make money. So, yeah, I mean, but you're not a long vol player. Are you sure? Are you okay that you're saying
Let
that?
me tell you what, well, it would be a way of really not being long vol, because I don't like to buy the option per se. You know,
Right.
I'd rather be in the future because you have no decay. I like the decay working in your favor. The only problem is that these trades are overcrowded on the short vol side, because, you know, when I was trading for years and years and years, there was only one expiration a month, and there was only, you know, there was basically one product to trade, and that would be the at the money option or whatever to get straddle pricing. And now you have esoteric product all over the place to create long and short volatility on a leverage basis and unleveraged. So, you know, it's interesting to note that all of that stuff is out there. I would say that the players are inherently short. They've been doing well other than 1 month this year. Those products debacle. This UVXY, I don't know if anyone's ever traded it out there. It's the worst.
So basically, a lot of people
world.
have it on the same way, and exit liquidity could be a problem for guys like us or guys like me getting trampled.
Well, it depends. You know, listen, on these non-pure products, okay, when you're trading SPY or the E-mini or whatever, nobody's replicating anything. What's happened to a lot of these products is, especially double and triple short indexes and long indexes, is the actual managers have to replicate.
Right. So it's financial engineering. Right.
Well, they're not, you know, when the vol is exploding, they're a net buyer, and when the vol is selling off, they're a net seller. You can never catch up to where you need to be. So, you know, those products are just set up to fail. So, but anyway, let's look at the market. Oil is up 24 cents. I like it as a short here. I am shorted basically from this level. If it drops 60 cents, I'm going to try to get bigger in the position. I think this is a top in here. We were screaming bullish when the thing was at 66, 67. Someone pointed out to me last night when they called me that we were all over the chat, you know, stating, you know, we were long multiple times, and we've traded it from the long side. I'd like to trade it from the short side here. Obviously, there's news in the market, but I think kind of all the news on the positive side is out. You know, OPEC didn't raise output. You know, they're not getting help here and there. They're pissed at Trump. You know, so we'll see. We'll see how it all plays out.
Let's put it this way: you made money shorting oil in a 1 to 2% rally yesterday. So, you know, that's not a bad day.
Yeah. No, you know, we were kind of, we were up small, you know, just on a mark because we stayed in the position. But
you were swing trading it.
Yeah. So So overall, I see gold is not moving.
We're not
So
talking about gold. We don't talk
okay,
about
no
gold anymore.
gold, no
Gold is
gold.
not an investment.
What's interesting is the euro is snuck up here. It's trading at 117.78, which is around the highs of the move here. And the British pound, which I love to say is always at 131, it's at 131.60, Mike. Mike, I always say it to him. I think it's been here for a year, so there's no trading there. Every other day it's a Brit exit, no Brit exit. So I don't even think you get much out of that. So on the currency side, dollar slightly weaker across the board, but nothing really going on there.
I think no, there's nothing really going. I think yesterday was a big day for the Turkish lira. No, yeah, well, reasonably big day, but nothing crazy right now. It looks like.
Where's the price of that thing? I haven't looked at that thing since they made it a news
exactly.
headline for a day.
It's 6.14 or 6.14. 6.15.
So it's still
but
hanging.
They've crushed the volatility in that. I think whatever they've done, they've kept it in a range now as they try and figure things out. Turkey's towing the line, at least verbally. That's what they're doing.
I'll tell you what, I went to Turkey a couple of years ago, and along with every other place I visited, their currency was on the high and the dollar was on the low. I think it was like 250. Right. I need to go. Actually, I need to go back. Actually, I'm not going back. I will never go back. But there were some nice sites, but overall it wasn't a place that you need to go to twice. But my point being is, like, when I was the last time I was in London, the dollar was about $1.90 against the pound, not $1.30. So my burger cost me like $65.
Like you're like a hamburger index guy. I remember those days.
Oh yeah. What do you mean? I had a $30 hamburger at.
The Big Mac index is what they used to call it. But yeah, that's basically it.
So it, I'm not. My timing isn't good there. But overall, it looks like it'll be fairly quiet. Today is not an expiration day. We can look at the straddle, which I will turn and look at in a second. But
while you're looking at it, because I'm interested in hearing that as well. We're stabilized above what 3. We're at 3 point. We're at 3.1% now. So the longer we stay here, it's got to slowly start weighing on stocks. And I'm not a believer in the interest rate itself being the only catalyst. I'm more looking at real rates, but I don't care. Psychologically above 3%, it's now staying above 3%. It's going to weigh on stocks at some point.
Well, listen, you're going to have the problem on 2 more raises in rates. You're going to be at 275 Fed funds. So the bottom line is, the 2-year will be above 3. It's trading at like 283, maybe. I don't know exactly. Mike, would you throw a 2-year chart up?
But that's true. That if they keep rates,
I want you to see this.
Anymore.
I want you to see this 2-year chart over, let's say, the last year or two. I mean, it is amazing what has happened here. This rate was under 1%. It's 283. It's gone parabolic, straight up. I mean, it is the most amazing chart that I've ever seen, as far as just like, it's probably had like 5 down days in 2 years.
They have made good on their promise.
Wow.
The thing is, so if the Fed raises 2 more times, Larry, just throwing it out there, is that more flattening, or is that going to be maybe the 10-year goes higher because we have a problem. You know what I mean?
Yeah.
Either way, it's just not good for stocks, right? How can it be good?
I don't know. Well, it doesn't really mean much. Nobody. The computer doesn't even know what's happening until they program that.
It doesn't matter. I'm buying stocks anyway.
Well, until they program that into the algorithm, they've taken interest. Listen, you see what the market does. It takes a negative news and just throws it out.
Yep.
But this won't end well. I think Trump gets whitewashed in the elections. The Democrats take pretty much everything. I could be wrong, and I'll be shocked. Listen, I didn't think Trump was going to win the election, so I'm not going to call myself a professional at that. But I think people are very disheartened here, and
I think fatigue is a good word for it. Even if there isn't bad news coming out, it's like just people are so impatient. Even if there weren't so many potential bombs, like for on the tape, of news, it's kind of like Trump fatigue. I'd rather him. I don't mind him being president. Just keep him. Just tell him to shut up for a week.
yeah, yeah. So we'll see. We'll see how all of that parses out. I guess. Did you put up the 2-year, Mike, or we can't get it?
Yeah, the 2.
Okay. Yeah, I mean, it's parabolic. So it's an interesting chart. What I do think, though, is people that are smart, see that the market has moved significantly. And before, the reason why they didn't pull is because they couldn't pull and get any return on their money. I mean, what's wrong with getting a 2-year at almost 3%? I mean,
Right.
worry about it later. It gives you, dry powder. It gives you the ability to watch markets, see what they're doing, and frequent, when you need to. We're called the opportunistic trader, and through my career, I've been able to be opportunistic, and in times of uncertainty, we've always been very, very, very good at being able to stay liquid, make money, and take advantage of volatility. I don't see anything now that looks, other than short-term trading, as an option to really making money. I mean,
Right.
Listen, if you buy Apple at 220, I'm not saying that's good, bad, or indifferent, but you've missed the move. I mean, this stock 2 years ago was $70. So, a lot of these moves are in. I noticed GE, the old bellwether, hit an basically all-time low, or a low since 2008 when it was $3. I think it's trading in the $11 range with about $100 billion market cap. I guess Tilray will probably pass that in a couple of weeks. No, only kidding. Tilray's got. so
I'm waiting. I'm going to buy Tilray coin when it comes out. I'm doing that.
Well, Tilray's unbelievable, and I don't trade names like this. I tried it for a bit. Didn't do that well, but
it'll be safe.
Well, I thought buying the stock at $130 down from 300 for a bounce wasn't a bad idea, but the stock traded under 100 yesterday. I see it's up 17% this morning.
So I'm sorry. Is this another conversation where it ends with your son makes money on a stock that you don't, and he throws it in your face?
No, my son actually didn't. I told him to get out of it. He didn't sell. Now he's sitting in it, and he'll never sell. They never sell. It's interesting. I wanted to, we don't really trade it, but we always look at it. But Bitcoin, is back down at like 6,300. It tried to rally. These altcoins all rallied and failed. The rallies were significant, like Ripple, which I watch, I don't trade, was 20.
Ripple's worth more than Ether, which I think now. Ether was number 2, but
yeah, I don't know. I think it's like close. I don't know if it is, but we could look at that. But it's close. But Ripple traded 25 cents, okay, and rallied from 25 cents to 75 cents in 2 days. Okay, it tripled, and then literally it's back to 43 cents today. So it's interesting. I don't think that they're going to be around in a year or two, a lot of these coins. So it'll be interesting to see.
I want to throw this at you on Bitcoin. It's actually on my radar to be with inflection points of 67.02. And I'm talking about cash, and 62.07 on the downside. And the point is, volatility is really coiled there. They've killed volatility in general when they listed it. but it's really coiled there. And on a daily basis, I think we could have a range expansion day, is what I'm saying, over the next couple of days. Just there might be some good trades coming in here. That's all.
Yeah. I'm not giving any thought to that. I just watch it as a bystander, an interested bystander. And, that's sort of the take on the market. Let's look at this 30 straddle for Fed Day. Pricing at about $13, which is, not very much for 2 days, but maybe today's a throwaway day for them. So we'll wait and see there, if we get movement. But overall, I see the volatility in the 11 handle on the cash VIX, which is not very good. It's funny, yesterday it was up pretty decently. And then
saw that too.
And then it came in, and it's an amazing thing that going into the month of October, in a year where we've really, do you know that we've only had one down month this year, February?
Really?
That's it on equities. Yep, it's up every month, of the year, other than that 1 month. So, maybe we'll get some shake and bake later, in October. But you know what tends to happen, and we have the election. So, it could stay quiet through October into the election, but I'm expecting there to be some volatility. I'm hoping. I'm praying, because doing $5 ranges on a $3,000 product is pretty weak. So,
yeah,
and financials are up today. Technology looks like it's going to be lower today. I see Apple down 90, Facebook trading down. I don't know what's going on in Facebook. It's down like $4. I don't know if there's any news.
I'll look for news. Hold on.
Emerging markets are slightly higher, even though they're not open for the most part. Oh, I saw that this morning. Yeah. Somebody left.
Instagram is right. They're losing talent, for lack of a better word.
Listen, I don't know. They're cheating with your information. It's just a matter of how much they're going to be allowed to cheat to get it.
But when leadership leaves, though, that usually, you know how it is. I mean, I don't know. Maybe Elon Musk is going to take their place. I'm not sure.
He's been very quiet.
Yeah.
I think
he's got his Ambien prescription filled.
He watches the stock. He's like, it's at 280. I got to tell him it's going to be taken over. So anyway, there's not a lot of action today. First day of a Fed meeting. We're going to, try to make a little bit of money. We sold the SPOO $1 higher than where it's trading. If we can get $3 or $4 out of it, we'll do a dance, and we'll be happy. I don't see any extreme moves other than Facebook in any of the stocks. They're up anywhere from 20 to 40 basis points, and Apple is down. Apple's getting whacked a little as we speak. It was down about 20 cents. It's down $1.
Well, I think it's really starting to come out that, one, they're not selling out of phones, which is something that you pointed out. Two, they're a big cap company. They're not a tech company, and they're not an aggressive tech company. And three, and this is most important, even though you can drop it in a beer and it won't shut down because it is that water resistant. If you drop it on the ground, it'll still break very easily. Apparently that's a big deal, but not a reason to short the stock, just a reason that.
Well, it's interesting. It's actually, NASDAQ is actually going to go red here. Apple is down about $1.20. I'm telling you, I mean, the best get back for China would be for them to basically, tell Apple they're done, and Trump would be running for the hills.
The China watch. Hey, I got something I want to throw at you.
Sure.
2018. Well, 2017, the top performer of all asset classes, if you want to call it that, was the MSCI China Index. 2018, the worst performer is the MSCI China Index. The best performer in 2018 is the Russell 2000.
Wow.
Yeah, over the
Shocking.
S&P, and then the REIT class. I always find it interesting when REITs are doing well.
Well, how much is the Russell up?
I don't have that in front of me. What I do is I
Oh.
have like a heat chart of something that Morgan Stanley put out. Number
Really? It's got
one,
the Nasdaq beat. Nasdaq's up like 17. Yeah, it probably does because I know that it was making new highs.
I think what
day.
they don't have the Nasdaq here. I think what they're doing is Morgan Stanley puts the Nasdaq in with the Russell 2000. I think that's how they do it. You know, but it's an inversion. Like last year, there was only one negative asset class, and that was the 2-year bond. And this year, there are only 3 positive asset classes, and they are all U.S. based stocks.
Really?
Russell 2000, S&P 500 REITs. Yeah, I'll send the picture over to you.
Oh, that's really interesting.
It's actually a nice little thing. It's kind of like FinViz, but it's Morgan Stanley's. Goes back to 2004. Green. It's basically green versus red, ranking 1 to 17. I'll send a picture over to you. It's pretty cool.
No, I'd like to see it.
Yeah.
All right. Oh, you know what we never talk about, and it might be in your wheelhouse, but it might not, and it's definitely not in mine. But copper. I don't know if you look at copper, but it's had a big move up.
I do look at copper. I traded it on the floor during the Sumitomo scandal, and I was told to learn more about copper because I traded silver so aggressively. Dr. Copper is an old reputation because it was, as you know, maybe the youngsters haven't heard the phrase in a while, but it was called Dr. Copper because it was a nice indicator, leading indicator for the economy and therefore stocks. Copper had a lifetime move lower over the last 6 months, and now it's showing signs of life. Now, people who are scratching their head, a little bit older, like more our age, are saying, well, Dr. Copper doesn't seem to correlate with the US stock market anymore. And what I can add is this: what I can say is Dr. Copper has relocated and now has a PhD in China. Copper is a Chinese stock market indicator, but what about that's the overview. I mean, there's a lot I know about copper that could fill a wastebasket. But what is it that you're looking at?
Just to jump in, it was great yesterday. I guess you missed Vince's comment. He goes, "It's not the U.S.'s doctor anymore; it's the emerging markets doctor."
Yeah, I mean it is. I mean, and Stadley, right? But that's because as I always say, things I think moving east. But what is it about copper that you're looking at specifically? It's definitely in my wheelhouse.
No, I just saw it. I just have it on my screen and I see the levels up pretty good from the low.
Okay, this is from a pro. This is from a pro, and I think you're not gonna trade this, but it's kind of cool. Palladium, even though it's precious, it's an industrial metal, not platinum. Palladium now frequently leads copper. Just forget platinum for the moment. This is from an expert on metals. I've known him for 30 years, and he really knows what he's talking about. But I used to look at platinum. We used to look at things like the white metals and copper as industrial, and then silver would be semi-precious, and then you would see gold and silver together. But palladium will lead copper a lot now, and platinum can't really make up its mind, and then silver. So if copper's up, look at seeing what palladium is doing. So not that you want to trade palladium because the bid ask is as wide as the profits if you're making money. But as an indicator, if you see palladium's up, I think guys go out there and actually buy some copper now. It's crazy, but it's working that way. That trade is working. So that's what I know or don't know about copper.
Okay. Well, I don't know very much, and I've actually never made a trade in it and don't plan to, but I always have it on the screen because obviously I don't think I've ever made a trade in copper. Could be one of the few.
Well, you probably saved a lot of money because it's not liquid. In fact, talking to a client yesterday about it, he's like, I want to put a copper trade on. I'm like, all right, what do you want to trade? He's like, this. I'm like, okay, it's not liquid. Well, that. I'm like, well, it's not liquid. How about the options? I'm like, really? So copper's not easy to trade unless you're sitting right on the LME and you can get that liquidity that you want. But copper is very tied to China. The copper, like think of copper with iron and steel. It's bought by the Chinese, basically as they get out of their dollars, and it's It's up. It's up the last couple days,
Yeah, it's
which
kind
is
of flattish. Yeah,
which
yeah, I
is,
saw it.
but
That's
that
why I
flies in
brought
the
it
face
up.
of my whole Chinese theory, because the Chinese stocks are a little bit lower. So let's see. Maybe
Well,
there's
the
a trade there.
emerging market ETFs are all a little bit higher. There hasn't been trades out of China, that
Right.
area in a couple of days. But overall, again, it's going to be dead slow. Market somehow higher. Nasdaq is up only $1 now, and the S&P is up 4.25. Not much going on. Little movement in Apple. Facebook, obviously, with the departure of the one Instagram and one other top level employee. I don't know why that's worth, billions of market cap, but I guess it is. Again, the trades that we're looking at are in oil and S&P. We are short both oil and S&P. If S&P comes in another $2-3, we'll probably cover for a trade. And like I said, we'll be happy about that on a day before the Fed. We don't expect a lot to happen. Tomorrow could be very interesting, though. I don't know how much more the market could hold up with rates going higher and higher and higher. So, we'll keep focused on that. But there's not really much moving around. I look at the Canadian. Oh, whatever happened to NAFTA?
Exactly.
Where is NAFTA?
I think if I were
another thing we were freaking out about that didn't happen. That doesn't mean anything for the market.
I mean, yeah. I mean, I think if I were, that's true. That's true, and I think that's
what happened to NAFTA. I don't know. They had to do it by 2-3 weeks ago. We were in trouble. Blah blah blah. Then they were having high-level meetings. Then they left, and now nobody's talking about it. And Trump did a deal with Mexico, but somehow that deal didn't go through either. So
exactly. Like that, it's out of the headline because I don't know. It's not.
I don't know.
But the news is real, man.
But wait. If we have a down day today, they might blame NAFTA. You don't know. They got to have a reason. So the reason will be crystal clear.
The only chart that matters, I think, for reasons to add to your comment is trending on Google. When NAFTA starts trending on Google again, it'll pop into the headlines. I swear that's the way it works. Yeah. It's crazy.
Yeah, so we'll see. But right now, quiet across the board. Financials are higher. Technology is mixed, but the big guns are down a little bit. Facebook and Apple. Amazon starting up $8. It could be down 50 or up 50. Who knows? And won't mean anything. And overall, bonds firmed a little, but they're still, yielding about 310 and change. And the markets are flat with not a lot going on. So I don't have anything else to add. If you do, I'd like to hear it.
I'm looking to buy gold with a $20 stop below. How's that? That's the only thing I'm thinking about. That's a macro trade. It's not a system trade. I'm looking to just buy a little bit of gold with a $20 stop below. That's not a day trade. So that's
what are you looking for in the upside? Because we always talk about this. Like for my trading, I'm almost willing to risk a little bit more on a stop than I'm going to make. But I know the way, or I think I know the way you trade is you want to make a lot more than what you're risking on the stop. So what are you looking to make?
Like you see the ace, you, and I think people should pay attention to this. Larry, I'm sorry to speak about you like you're not here, but some traders, and it seems Larry's more this way, sees the asymmetry in the probability. So I'm not going to. Larry doesn't do this, but once in a while I'll risk 2 to make 1 because I see such a lopsided asymmetry. Well, I won't get into the likes, but
I do that every day of the week. I love that.
Exactly. So the problem with that for me as a trader is that if I delude myself or I'm having a bad day, I'm not disciplined enough on my own to the asymmetry is there. It's worth risking 2 to make 1. And so I had to develop a system where I only risk 1 to make too. And of course, that's a whole different world of problems. But to answer your question directly,
the reason why I bring that up is because you just said you're going to use a $20 downside stop. You're going to put a position on.
It's a 2 to 6 month hold, and I'm looking for. I'll give you levels. The levels are 1296, 1330, and then I think about getting out. So it's
1330.
Yeah. I'm risking, but I'm only risking $20.
No, I know. I think it's awesome, but I'm saying for me, I mean, I don't see 1330.
It's a macro trade. It's not.
I know, but then how?
But
But then that leads me to a good question, I think, for you. Okay, so you also trade shorter term, and you do other types of trading.
Yeah.
So how do you this is a good question for people out there that are listening that want to understand the methodology of how you kind of trade around what I would call a core position that's you're going to sit in. For those prices, you're going to have to sit in that trade for a long time. So how do you trade, or how do you assess the market if you have a long bias with a $20 stop and the market's trading every single day?
I lie to myself. No, I'm just kidding. That's really a good question, because there are people such as myself who feel you'll frequently hear people say, you don't know what it's like until you have a position on. You have to have skin in the game to get real feedback. And to credit to that statement applies to me. Everyone has their own discipline, meaning whatever way they trade. I trade much better directionally when I have a core position on. So some people, don't get me wrong, I like being flat, but if I have a core bias to be long, and what'll happen is I will be that much more focused on the market, and I will swing trade short on that long position, and I will make money. And the irony is, your core position just cost you 20 grand and you made 15 today. So, but I am more, personally speaking, I am more comfortable with a core position day trading around it than I am
but let's say you get a signal to be short, okay? Because I'm sure during the period of time that you're long, you're going to get a period of time where it might want to get you out. So will you exit? Do you consider that, like we used to call something?
A black box.
No, we used to call something a back book position. So what would happen is, we would have a position in, I'll just use.
Yeah, we would call it a black box, but a back book is a better way to put it. Yes.
So what I'm saying is, like, we had a position in Walt Disney, okay, the firm. So the firm like Walt Disney. So we back booked 100,000 Walt Disney, or whatever the numbers were. So we put it in our positions. We would actually take that out of the position. So that position would never be seen. So when you came in on Monday morning after a Friday, and you were long 100,000 Disney, or in our case probably more at that point, we would back book the position, and we would trade the position as if we were flat. So we would not inherently think that we had a position, even though we did, and it would give us the ability to trade the stock on a day-over-day basis without being influenced by the fact that we backbook positions. And we did that in a number of securities. I remember when I was at Spear Leads in the 90s, IBM was, obviously it's not a bellwether now, but it was the bellwether stock. It was the most important stock in the index. It was the Apple of its time, and it was getting killed. And if Apple ever did anything like that, the world would go bankrupt. But the stock went down from like $150 to like $30.
Right.
We backbooked, I remember, 2 million shares that they never sold. But that never impeded on the positions of the firm. So what I'm asking you is, like, if you were long gold and you're using levels that are 100 plus points away from the market and 20 on the downside, for you to do a trade around this position over the next couple of months, you're going to have to not think about the core position you have on it. Do you look at stuff like that? Would you trade this?
I can answer that directly. It's really difficult to do it when you're doing a solo operation. You have to be careful you're not lying to yourself or deluding yourself. But when I was running Barrard Capital and I had like 20 traders on the floor, it was much easier to do. We would call it a black box. It's a totally incorrect way of saying it. But we would pull things out of position because we didn't want to add to it or something like that. We would create a negative position in the position. But that worked. That was it was a great tool when I had 20 people under me. But solo, it's also a great tool, but it's not easy for me to do. What ends up happening is, and I'll give you like 3 examples on the same position. Let's say I have a bias to be long in oil. All right, so I'm long in oil, and I have a bias for a macro or some reason that has nothing to do with my system. And then I get an hourly signal to sell oil. Instead of selling 5, I'll sell 10. You know what I mean? Because I know that I have a core position. So my core position does factor into my day trading when I have it. So in that sense, I'm kind of messing up my own risk reward. It's very hard to do when you're alone, if you're not managing a team.
No,
But
you know what? I fully agree with you, and I get it for sure.
you start rationalizing all kinds of nonsense, and you're like, what do I have on now?
See, for me, I would just look at it like, hey, I got the signal to be out, and I would get out, even if I had a long bias, and then I would reestablish my long bias in gold after the market came in. And if the market
and the way I trick here's the example. The way I do what you just said is, crap, I got a sell signal. I want to get back in. Let's say my core position is long 20 oil, right? Okay, and it's like, oh, I got a 1 hour sell signal that has a 4 hour sell signal behind it. Crap, let's get out of all my oil. I'll buy some calls. That was me. That would be me. I'll buy some calls because I'll kill myself if I'm wrong here. Right. So as opposed to you look for the dip to buy back into your core, or you may not buy it at all. But it's difficult to do alone.
Yeah, no, it's just a different way to look at it. And I get it. You are right. When you have the firm entity, it's obviously easy to back book because you have a number of different traders.
But they would just put it on again. See, we all had a bias. Like, I don't know how you guys handle it. If the whole company had a bias to be long Disney and you pulled out like, 1 million shares, you'd end up being long Disney again at the end of the day. Like, I would have to do the opposite in my company. Like, we were always biased long tails. And the model couldn't model tails very well for delta purposes. So we pull the tails out. So we wouldn't have this long upside. And by the end of the day, they'd be long them again. So I started changing people's portfolios to be short tails, or so long tails. I would add in tails that they didn't have, so they'd stop buying them. It was just massive, self-delusion because we all had the bias. I don't know how you do it. If you have a bias to be long Disney, you pull it out. It's like, oh, we're flat Disney. I'll go home long it. You end up putting more on. Sometimes.
Well, you just have more than one position per se inside.
I know. We had a groupthink mentality. Our meetings were not probably like your risk meetings. We were groupthink.
Yeah. No, I get it. I was just wondering because I don't expect any of those levels to happen too quickly. So to go days and days and days without trading,
right. And it's a major hazard because it ties up capital that you could be trading other products and making money. Yeah. And core positions are dangerous in this environment when I think so much money is to be made short term, not intermediate term. That's so, yeah.
I just wanted to point out something interesting. It's very funny the way these algorithms work. They work on the hour. It's like the weirdest thing. Like, I watch the crude oil open, and it goes straight one direction every morning. If it's down, it's down. If it's up, it's up. It's weird, and it happens right at 9:00 a.m. It's really it's amazing with these algos. But anyway, we're running into Joe Vaklovic's time, so I want to wrap up. I appreciate you, Vince, very much. I appreciate your new show. It's very insightful and it's educational, which I really, really like. I want to go over
and
the
it's
schedule.
R-rated. It's R-rated. There will be profanity.
I like that. I'd like to go. Hold on one second.
Thank you, Larry, for the opportunity, first of all.
Oh, no problem. I'd like to go over the schedule. We have Joe Vaklovic at 9, which is a little after 9, so he'll come on after we get off. Then I'm happy that Phil Flynn from the Price Futures Group and a Fox contributor will be joining us at 10 o'clock talking commodities. I love to engage with him and also listen to him. At 11 o'clock, we have Ed Meir from the Commodity Research Group discussing metals and macro themes. And then at 1 o'clock, my buddy from the old days, Tommy McEntee from the floor of the American Stock Exchange from the 80s, 90s, and 2000s, taking us through some equity trades. I saw he's been pretty active in the equity room and putting on trading thoughts to the community, and I appreciate that.
Short
and
some stock, buying some calls, and actually helping subscribers understand the rationale behind it. He's been a big help recently.
So that's our schedule today, and I'll leave you. The S&P is trading at 29.30, up 475. Nasdaq is up 375. Expect it to be a quiet day in front of the Fed. Hopefully we'll get some trading action off some fake news like we got yesterday with Rosenstein resigning, not resigning, being fired. I thought it was funny. I actually drove home last night and they kept showing pictures yesterday on CNBC of like underneath a tree in the White House trying to get Rosenstein going to the White House. But what I realized when I went home, which probably not a lot of people thought about this, but why would he go to the White House yesterday when Trump was in New York giving a speech I think he's in New York for the next couple of days.
Just flipped a letter under his door. I quit.
No, I don't know. But it was funny. All day long, they sat outside, and I'm thinking, why would the guy go there if Trump's not even there? So
I know.
That's just the news and what they do. So we'll wait on some fake.
They should just Photoshop it.
Fake news headlines today. Other than that, quiet day overall. Don't see a lot. And volatility is under 12, so we're not expecting much. And I'll be back in probably around 10 o'clock or so after Phil to discuss what I'm seeing in the markets, but I don't expect
much. Are you on with Phil? Larry?
Sometimes. I think Mike might do it today, but I'll be on the desk.
If he's taking questions, I have a question about Brent. Maybe.
Okay, so put it in the chat and he'll answer it. We'll parse it out. Anybody that has questions could go through the chat. Phil is awesome and has unbelievable knowledge on these markets. Has always been on TV. On CNBC until he went to Fox pretty much full time. So anyway, I got to get to the markets here, so we'll be back to you later, and we'll hear from Joe in a little bit.
Cool.
Vince, thanks a lot.
Thank you.